What's going on, y'all? It's Cuzin Cash.
Who the fuck is that guy? Who the fuck is that?
What's going on, y'all? It's Cuzin Cash, and I apologize for my voice. I do want to say I thank everybody for their well wishes and their prayers and stuff. Me and my family, we hanging in there. We're troopers. And so for the most part, we're going to get through this. I couldn't let nobody down. I hate letting people down. So I told you guys that I would drop my first YouTube video this year, the beginning, and COVID kind of pulled me back, this new variant. And so now just know, guys, that win, lose, or draw, I'm right here rocking with y'all, and I thank y'all for rocking with me.
Come on. What's up, fam? How you doing? All right. Never forget about that, because that's all we got.
Today, guys, we're going to be going over the double Z. Now, I'm sure you've seen the double Z and didn't even know it was a double Z. So many different variances of it has been thrown out there on the internet. And shout out to my guy, Jay, for showing you guys or introducing you guys to the double Z strategy. But even Jay didn't put the actual official strategy out there, but you guys have been seeing him win with it. You've been seeing his wife win with it. With that being said, I'm going to give you all the official insight of how to actually trade the double Z strategy. Quick disclaimer, I'm not a financial advisor. Therefore, I'm only showing y'all what works for me, and this should be taken for educational purposes only. So don't be hopping on my pizza box when I try to run up in Little Caesars to get it hot and ready, and I go to pull it open and you hop out like
BAM! Alright now, check this out. Don't pay any attention to the drapes and fixtures, alright? My number's here on the back, alright? I'm staying with Mom.
about like, yo, Cash, I tried that strategy and I lost, man. You owe me $50. Listen, after I close that box and I fling it 50 yards like a frisbee, I'm gonna talk about you, because with trading comes a risk. It ain't always cracked up to be. There's 3 things you need to be a serious trader: trading psychology, defensive trading, lastly, the actual strategy itself. Let's dive into this strategy right now. All right, guys, I'm going to try to get through this pretty quickly due to the fact that I'm really losing energy over here. So here we are to kind of dive in it. Now, you're going to need 3 formulas to make this actually work, which is the trading psychology, the defensive, and the offensive. And I'm going to teach you those 3. As far as the trading psychology, you're going to follow 3 basic principles. You're going to have to be disciplined. 1, you're going to have to be patient. 2, okay? And you're going to have to be mindful of the type of trader you are. If you don't know what type of trader you are, I'm going to tell you right now that this may be hit or miss for you. Meaning, you might be a scalping-based trader, even in binary, okay? And most of those people have very little patience. This is not one of those situations where your little patience is going to get you far. It's not going to work that way. You're going to need a bit of patience to be able to identify a proper move. Let's normalize not just looking for a winning move, but let's normalize defensive trading as well, which is looking for moves that may not be a winning move. Hey, if I go in here, is it a possibility? What has the market been doing? Start looking left. Start seeing what it's did in the last 15, 20 minutes. As you see on my chart, I have a 15-second time frame, or a 15-second chart with a minute expiration. And my expiration time is typically 30 seconds when I'm trading 15 seconds, or a minute if I'm trading 30 seconds, or 2 minutes if I'm trading 1 minute. But the whole point is, guys, the type of trader I am, I can be impatient at times. And so when I am a little bit impatient, I do things to make sure that the strategy is conducive to how I'm feeling. So a part of defensive trading is not only knowing what can happen to you via the brokers or via the market, but what you can do to yourself. All right. Self-sabotage is the number 1, if not the number 1, definitely within the top 5 of account killers. Okay. Start taking accountability for your trading, wins and losses, and you will become a better trader. So let's jump into these indicators really quickly. The first indicator I want to put on my chart is the zigzag. Now, mine is already there already, but you can go into your indicators list here and find the zigzag at the very bottom. When you get that zigzag, you want to leave the settings the way they are, especially the deviation, okay? Now, don't touch nothing else, but if you're going to experiment, leave the deviation where it's at. Go to styles. I like to make my zigzag, the first one, blue and 4 pixels. Okay, this is our trend zigzag. If you notice, it follows the trend almost to a T as far as formation and movement. Okay, now rule of thumb is when you are trading off the trend zigzag, you can trade anywhere from a 2 to 5 minute trade. That's because the deviation is basically telling you it's going to take about 5 candles in that particular direction for it to print. As you can see, here's was printing down, it's printing now. 1, 2, 3, 4. All right, so you have these 4s, and here's your 5th one. Okay, now they outnumber the bearish candles, outnumber the bullish candles, giving this the confidence to print for a sell. Okay, so you want to get deeper into that, I would suggest you guys click the link in my bio, comes to my private Discord, and just shout out to somebody, hey man, I need to cop Cuzin Cash's course so I can get on top of it, and guys, I'll get you set up. Now let's move on to the next indicator, which would be the zigzag 111. All right, so you will go grab another zigzag, put it on your screen, and you're going to make this 1, 1, and 1. Now the blue zigzag represents trend, so this particular zigzag, when it's flattened out, represents price action. We're not even going to bother with the style, we're going to leave it the way it is. Now if you notice, there's a whole lot more movement in this zigzag than it is in another one. All right, and one of the things you really notice is these M's, these W's. I'll break that down to you in a second. Okay, you have your trend, you have your price action. Okay, now finally, oh, really quick before I put the cart before the horse, if you are trading off of this particular zigzag, right, which is your price action, then it's safe to say 5 seconds to potentially 2 minutes. Again, going back to the deviation, this deviation is letting you know by it being 1 that it can change within 1 candle. The 5, 12, and 3, it would take about 5 candles, but in this particular situation, it can change within 1. If you notice, from here to here was 1 candle movement when it changed. Here to here was about 3 candle movements when it changed. Here, 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, I'm sorry. 1, 2, 3, 4, 5, 6, 7. I'm sorry. What was I doing? So it took 7 candles before it changed. So that's why I said you can experiment. Now I have some enhancements to the double Z that really cuts down a lot of worry in the market. Make sure you cop the ATM, the binary ATM strategy. I'm telling you, I won't let you down. All right, so we got trend, we have price action. Now let's go moving average. Our moving average here, 1 second here to make sure we are rolling. Cool. Our moving average here is a very strong moving average, and that moving average is a 62 EMA. And the thing about the 62 EMA is that it's a strong moving average regardless of its binary or forex. Okay, now I like to make my style purple, 2 pixels, just so it stands out on the chart. Make sure it's 62, make sure it's exponential moving average and not simple moving average, and we're going to save it. And the thing about a 62 EMA is that it takes about 10 touches from the candles before it's penetrating. Okay, it's a very strong moving average. Again, there's a lot more detail, a lot more girth to that information, but I would suggest that you, and that's common knowledge as well, guys. You can look that up in forex, but for the most part, cop the course. I'm telling you, we go into massive detail, and as much as details I want to go into, my chest is burning right now, like just getting tighter and tighter. So I'm trying to push through this. All right, and then finally at the bottom here you see 17, 3, and 3. That's our stochastic oscillator. All right, now as a quick sauce note for you, For those who've been seeing this strategy work and you've been seeing it with 2 screens, now when I showed the strategy and I showed it with 2 screens, I showed it based on just covering different points of the technique where you can catch, like here, this was a great entry. You can catch a solid formation of the candles to see exactly what the trend is doing, and then you can get in where you fit in by trading the pulse of the candle. Right now, understand that the line chart here moves a whole lot faster than your candlesticks, but there's a reason for that. Okay, now most people, you guys have been seeing it, and when you reach out to me in my inbox, this is what it looks like. And if you know, you know. The problem is it's moving that fast, and it seems pretty hard to maintain and deal with, because you are looking, it's almost like looking at the candlesticks at 1 second. All though it says minute 2, that's just not the case, right? So the way you slow it down is I trade the line chart on the M14, right? Or in that bracket. Okay, I'm a little anal, so the M14 works best for me. And then if you notice, when we were in the lower time frames on the line chart, the stochastic was beating the move, which isn't necessarily good. So when you're trading the line chart, guys, and you're using a double Z or period, and you're using a stochastic on it, the confluence numbers to use is 26, 6, and 5. 25, 6, and 5. And as you'll notice, now they're working with each other. Now the pace is in sync, and that's what you want. You don't want nothing too much working against you, because you'll create self-divergences. And if you don't have a strategy for that, I got one for you. The only time you want to create a self-divergence is when you are using defensive tactics. But again, I teach that in the ATM course. All right. Shameless plug. Don't judge me, judge Mathis. Now, going back to the candles here, though, let's change our stochastic to 17, 3, and 3. And so when you are trading on the candles, you're 17, 3, and 3. And when you're trading the line chart, you're 25, 6, and 5. All right. Now, you guys have seen this, and if you haven't, this is your first time. What's up, cuz? All right, do me a favor. Don't forget to like, subscribe, and share this video with people who are genuinely interested in learning how to trade binary and tired of the BS that they got on the YouTubes and in the Googles, where you're seeing surface trading. Drop that in your sauce notes. If you don't know what surface trading is, that's basically a strategy with no defensive details and no trading psychology behind it. So now you're just watching somebody take $1 to $30,000, and if it sounds like it's shots fired, then I'm just lighting firecrackers. Trust me, I'm just getting started. So with that being said, cousin, I'm just here to bring the real about trading binary, because it's not gambling and it's a real art to it. And as long as you have a trading psychology, a defensive trading plan, and an offensive trading plan, you can trade this like you can trade anything else. Now, we have our stochastic here. We have our moving average, our price action, and we have our trend. Now, really quickly with the moving average here, right, guys? Anything below the 62, you're identifiably looking for sales, right? You want to identify the best sell movements. It's not to say that the buy movements are not going to be there. It's just saying that the sells are probably going to be a little stronger, and vice versa. Okay, if it's above the 62, you're looking for buys. Now, a little cheap trick to see what is going to happen is finding those M's and W's. Now, M's and W's in binary is extremely important, right? Because this allows you to get an understanding of where the charts are going to be. Make no mistake, OTCs and organic pairs trade differently. So if you're going to use the 200 moving average, like I see a lot of people using, make sure you know that on OTCs, OTC actually stands for over the counter. This means that this particular broker printed out their own variants of what this particular pair is doing. So just know that the rules are different. The only thing that they have to do, because they're being watched by the by the FTC. My mind, I just had a brain fart, guys. But you know exactly who I'm talking about. They're being watched because you have to be a regulated broker in a sense. Doesn't matter where you get your regulation from. So be careful with that. But they are monitored. And so the reality to it is, guys, they only have to make the market, the charts, follow basic they only have to make they only have to make the market follow UMF laws, universal market fundamentals. Make sure you put that in your sauce notes. Universal market fundamentals. Basically, that just means that what makes the market, the OTCs have to follow. So right there, that tells you and that lets you know, hey, look, the market has to go down, it has to go up. It has to be a buy trend, it has to be a sell trend. Okay? It has to be overbought, it has to be oversold. Okay? When you are dealing with binary and OTCs tend to hang out a little longer in the overbought and oversold zones than the organic pairs would, like a real USD, Euro USD opposed to a Euro USD OTC. Okay, so make sure. I know a lot of people say, hey, never trade OTCs. Stop being scary. Okay, if you know what you're doing, then you're fine. But I get it. There's very little binary information out there on the market, and that's what I'm here for. All right, so going back to where we were, I like to look at my moving average, and I look for W's or M's in my moving average. Right here we have a W. Leg 1, leg 2, leg 3. Right? Now, for every fourth leg of a letter, it becomes a third leg of another letter. Okay? So, remember why I said that? Every fourth leg of a letter, it becomes a third leg of another letter. Right? So, what do I mean by that? Well, what if I told you that this was leg 1 in the moving average? This was leg 2. Coming down here. Here's leg 3. Short leg, by the way. Leg 3 and leg 4. Okay, you'll see here in these blue zigzag lines. Let me take this. Go with the blue. Leg 1, 2, 3, 4. That's a clean M. But, and here's a great way of being able to identify them. Check this out. A little secret that I use for those who are new. If you're not new, sit back and relax. All right. So here we have a nice little M that's created. Okay. Now, when you want to know how to identify what's next coming, you have this M, you find the cleanest M, and you cut off the first leg. Now we have a 4-legged M, and then we have a 3-legged W. Leg 1, 2, 3. Well, where's the market going to go? Up, right? Well, check this out. Here's leg 4. Market went up. This is universal market fundamental. You cut off that first leg. Now look at what we're looking at. Leg 1, 2, 3. Where's the market going to go? Right? Basic, simple stuff. Market's going to go down. Now, trend is driven by price action, guys. So with trend being driven by price action, let's drop price action in here. When price action and trend connect, that's when you see those strong reversals. Why is that? Well, think about the deviations that we spoke about. You know, it takes about strong 5 candles or a solid 5 candles in a trend to make sure it's going in the right direction, right? And so when that happens, that's when you get this blue zigzag line printed. But what happens when price action and trend connect? Well, trend, when it pops up, lets you know that that's the end of the direction that it's going in, right? So whether it's 10 candles or 1 candle. So the way you identify when price action and trend connect and when to go up, I like to, when I'm taking this move, yes, we are under the 62, I get that, but we're also at the bottom here. And I see I have a leg 1 in the trend, 2, 3, price has to shoot up. So it's creating this small little candle. And if this candle goes past this wick right here, this wick right here, then you'll see price action and trend connect or drop down. Now this is called a gap. We don't trade these gaps, guys. And the reason why we don't trade these gaps is because it has the higher potential to reverse. Now, universal market fundamentals tell us that price action just ended the succession of the downtrend. Okay? Now, does that mean that it's absolutely going to reverse? No. But when you get this gap instead of an actual touch like here, then sometimes, or more than likely, within the next 3 candles, it will reverse. Now, this is the minute chart, so I would have taken this for 2 minutes, and already I'd be nervous. Okay? They didn't connect, and so I'm practicing patience. Now, look at how long it's been riding at the bottom. So from the time it touched, the last time it got down here, we're looking at 2 minutes, 3 minutes, 4 minutes, 5 minutes, 6 minutes, 7 minutes. It's been at the bottom for 8 minutes. Okay? So for those of you who've been using the strategy and was taking it just because price action dropped, it didn't touch, and it was a gap, and look what happened. When you get that gap, it drops down. It's a stronger possibility it's going to reverse on you. Therefore, the best that you could do if you're going to be an impatient person and take that move is to scalp it. 5-second buy. Okay? Maybe you could pull off getting 2 5-second buys in there as long as it's an OTC. If it's an organic pair, just let it drop down. As you can see right now, it's pushing trend. Okay? Now it is at the bottom. Now we are actually under, and this is the lowest it's been in a while. It's literally sitting at 1%. Okay? Literally sitting at 1%. So now I'm looking for a potential reversal. But this is going to be a strong sell because look at this bend here in the moving average. Right here. Strong bend right here at the price of 78.984. Now, we have 30 seconds. I'm going to tell you what's going to happen. If this plays in this range, like if this candle shot past this point here, then price action would drop. Now, as you can see, we're counting down to 16, 15 seconds. And within the next 15 seconds, if the next candle open, and let's see if I can get this in there really quickly. If it opens here, we'll get a price action connect. If it opens at the bottom here, it's going to continue to push. I mean, if it goes down, it's going to continue to push trend. So let's see. Now, I don't like how that candle opened up for the buy first, because typically it'll create the wick in the opposite direction and then shoot in the opposite direction, right? But here we are, it's struggling. We'll get a price action connect if this thing touch, and I don't see it. I see it playing around. So at most, we'll probably get another gap. Price action touch right there. See how that? Once you get used to identifying, now this would have been our position. And so far, we'd have been winning this trade. Once you get used to identifying when price action and trend is going to touch and what type of touch it's going to be, that gives you a strong advantage in these types of strategies. But keep in mind that This thing has been down, I think we said, for 7 minutes. So you got to find out if that's going to be a habit or not. Okay. Now, I would have taken this for 2 minutes. So let's just say that was 30 seconds. And what we want to do is we want to see this thing kind of clear. Now I see a bend here in this moving average, but I also see a gap. So it's pretty indecisive, but we can pretty much see that from there. Now, when in doubt, when you have an indecisive market and you can tell when price action and trend is going to connect and when it's going to touch, you can scalp. Now, price action just happened because this candle broke that little wick at the bottom of this candle here. So when it broke that little wick, it gave us a price action connect. All right, not a trend, but another price action connect. Now, this is threatening to continue to push this as a downtrend, but keep in mind, universal market fundamentals tell us that when it's overbought or oversold, it has to come back to a certain level to continue to be overbought, oversold. Now, I don't know if you guys are noticing this, guys, but this, we took 30 seconds on this. We took a minute on here. So if this thing, I want to believe we get to the 30-second mark here, we probably would have won that trade had we jumped in. And look what's happening. 6, 5, 4, 3, 2, 1, and we would have won that trade. Right? It's just hard to trade and teach at the same time, and I'm really focused on you guys learning the actual process of what to see, how to identify the wins and the losses. Listen, guys, the parlor trick to everything, typically whether you're trading forex, stock options, futures or so, is your strategy. But the skill comes in defensively and psychologically. Okay, that's where the skill comes in at. The reason why that happens, and I'm gonna tell you, once it gets past a certain point, really quick, I'm gonna cut myself off. That's how you can tell I'm tired. Once it gets past a certain point, I feel like once it gets to about here, you'll get a trend connect, meaning this blue line will attach itself to one of these candles and will begin to push toward the moving average. But going back, identifying the offensive side and only identifying the offensive side is surface trading, guys. And a lot of you guys have been doing so, hopping on these YouTubes and trying to figure out why it's not working. So before you say binary is a scam or forex is a scam or this person is scamming, that person is scamming, learn how to trade. Learn how to trade, okay? And learning how to trade is not the offensive aspect of it. It's not that. It's literally learning how to control your emotions. It's literally learning how to control your logic in the chart, and is learning how to protect your account. Okay. Now, before I go, guys, because I'm my red light on my on my fuel tank is bleeping red. Before I go, guys, really quick, let me mention this again. Make sure you like, subscribe, and share. I promise you, I'll have so much more energy once I beat this COVID thing. But for the most part, one thing I want to share is the enhancements to the double Z. For a lot of you people who are out there hitting my inbox, what's up, cousins? Shout out to everybody. It's too many to name, but shout out to everybody that's been hitting the inbox and everything with well wishes and stuff. And I love it, and asking me questions about the double Z and about my strategies and courses and stuff. One of the things you got to understand when you're using this strategy is one of the entities that you're battling in the market is not just someone else trading against you, but it's literally the broker, the three titans, the brokers, the bankers, and the market makers. You need to know as a trader, what are good months? Why are certain months good months? It has nothing to do with liquidity in the market in a sense. It has everything to do with the three titans, the brokers, the bankers, and the market makers. Here's a little sauce note for you. January, February, March are your market maker months. April, May, June are your residential traders, basically people like you and myself. Okay, July, August, and September are your broker months. This is where you'll see a lot more broker manipulation. And then October, November, December are your banker months, and this is where you'll see a lot more bank moves happening in the market. Guys, I'm going to tell you, if you have that down, that's going to help you out a lot. The last little bit I want to show you in a couple of seconds is, and make sure you reach out to me, link in the description, for those who are interested in the copping the course and learning more about binary, is this is the secret sauce to knowing when things will reverse. It's the super trend. The super trend doesn't just do what it is that you think it does in the market based on the name. Trust me, it's definitely a tool you want to have in your toolbox when it comes to trading, especially trading binary and especially trading on this particular platform. I'm telling you, ATM, guys, is out. It's available for you all. ATM stands for Always Their Money, and we're talking about the brokers. I can't wait to meet up with all my family and have a family reunion and just get together, man, and laugh and be successful. 2022, guys, is our year. If you don't believe it, get the hell up off my channel. But if you believe it for yourself, then by all means, I need you to do one thing, and I need you to write down somewhere in your notes, or write down, make a mental note. I need you to make a promise. Matter of fact, do me a favor. In my comments, I need you to drop "I promise" in the comments. Okay, guys, that you are going to do what it takes to be successful this year. And on that note, guys, I'm out of here. I love you all. I see you when I got some energy.